We spoke a year ago on the eve of the NPC. We've certainly seen quite a number of measures being outlined by the Chinese government to further open up the market. We've got the inclusion of Chinese bonds in global indices coming up next month. How much interest are you seeing from clients? How is Pimco positioning for next month's inclusion?
Well, it's an important question. We've seen a lot of interest from clients, and certainly as a fixed income manager, it's an important market for us. One of the important catalysts, of course, will be next month in April. The Bloomberg Barclays indices will be including China bonds into benchmarks. This is really important for local clients here, but also for our global clients who will now have structural allocation to China bonds as part of their benchmarks. So Pimco has been preparing over the past year with our clients, with their custodians, to make sure that we are operationally ready to trade China going forward. It's the second largest bond market in the world, having just surpassed Japan, so it's going to be increasingly important for investors.
Now, some estimates put 80 billion of inflows this year. Morgan Stanley says that could even bump up to potentially 140 billion if two more indexes add Chinese bonds. What's the potential for that?
No, we think that's exactly right. So over the next 2 years, about 150 billion in inflows. That's from just passive management alone. And over the next 4 years, up to 250 to 300 billion. And you're right, we expect the other index providers to follow, JP Morgan and others later this year.
Now, to illustrate this for our viewers, let's pull up this chart on the terminal. It depicts foreign funds piling in to Chinese debt, holding a record amount in December. But with this access also comes the transmission of volatility into global markets. How is Pimco navigating that environment?
Sure. Well, I mean, like any new market opening, I mean, we've seen this in emerging markets that we've invested in for a longer time. As markets open, there's definitely increased volatility as the markets get to know that liquidity and other instruments come into the market. So that's not any different than we've seen elsewhere. But we are preparing. I think the index providers have been thoughtful around this. For example, Bloomberg Barclays is going to have a glide path into this over the next 20 months where they get up to a benchmark weight of about 6%, but it'll start relatively small. So investors will have time to understand how the market dynamics play out.
Yeah, time over that phase-in process over the next 20 months. How is Pimco weighing credit risk, especially as we've seen corporate debt defaults rise on the mainland?
Well, I mean, it's an important area of focus for us. We think, importantly, you need to be selective, and this is where active management is really quite important. Really careful bottom-up credit analysis is where we're focused on. You don't want to paint with a broad brush and look at, Chinese credit markets holistically, but we do see a lot of value there. And more broadly, we're seeing a lot of demand for Asia credit strategies. Obviously, China is a large proportion of that market. We've actually launched recently strategies to take advantage of that demand. Asia high yield, for example, is an area where we have a lot of conviction for clients.
And broadly speaking, is it time to allocate more towards high yield, high grade in Asia as well as in China?
We think so. I mean, for the first time, Asia credit on a relative value basis relative to U.S. credit as well as European credit looks really attractive. And so investors here want to take advantage of a home advantage to invest in local markets, achieving strong risk-adjusted returns. But importantly, we're also seeing that demand from our global client base as they're probably under-allocated to Asia credit and looking to increase those allocations.
Now, Kim, turning to Australia, one of the main offices for Pimco in Asia, there have been some regulatory challenges in the financial services space. Superannuation, for example, several funds have exited. We've seen changes in pricing, competition heating up. Has that changed or altered the strategy for Pimco in that market?
I mean, not really. What it has is it's caused our important distribution and banking partners to have to take notice to all the regulatory changes. So there's been a bit of distraction from that as people are just trying to understand, what this all means. We've been trying to play a role to help educate the markets on the importance of advice in the local markets and just help support with strong solutions that we've seen in the local market there.
Now, Australia preparing for elections in May. Climate change policy has been a key election issue. How is that fitting into Pimco's ESG platform?
Well, you're right. I mean, Australia is actually a pioneer in ESG. They've been long-time investors on the ESG front. I think the big opportunity that we see from Pimco is that you've long seen ESG in equity space, but you haven't really seen it in fixed income space. And so this is an area where we think that we can be a trailblazer in incorporating ESG into fixed income, into our bottom-up credit selection. We're also quite fortunate that we have access to issuers, so to actively engage with issuers to enact positive change, and then also also to provide transparency around reporting. So these elements we think is a little bit of a pioneer in that space, and we think will add a lot of value to markets. We've launched strategies in Australia on ESG, and we're seeing a lot of adoption.
And Kim, since we last spoke, Taiwan, the office there has been set up for Pimco. How's that been getting the business off the ground?
Well, it's been great. So we went officially live actually this January, but the office was set up in Taipei. We assembled a really talented team of professionals late last year, and all of this the objective of making sure that we have deeper engagement with our important Taiwan distribution clients to engage directly with them. So it's going great so far, and we're really excited to engage with this important market.
And Kim, in timely fashion for International Women's Day, Pimco announcing promotion of one woman as a new managing director. Going forward, what would you like to see to encourage further bridging of that gender equality gap?
Well, it's an important area of focus for Pimco from a broad gender perspective, but also, more importantly, when you think about investments from a cognitive diversity perspective or a diversity of thought. We're in the business of making investment decisions, and so to have more well-rounded, better ideas from multiple people to engage talent is really important for us, and women are at the top of that list. So a lot of focus on how do we think about career pathing, career development, stretch assignments for women, and putting women in important leadership positions. This is the case on the investment side and on the business management side as well.